Welcome back, Stock Talkers. My name is Julie. If you guys are new to my channel, welcome. So in today's episode, I want to give you 5 dividend stocks that are all under $20 and have a yield of a minimum of 8%. So the first stock that I want to bring to your attention is PBF Logistics. And PBF Logistics is in the oil and gas industry. And PBF Logistics owns, leases, operates, develops, and acquires crude oil and refined petroleum product terminals, pipelines, storage facilities, and similar logistic assets. It was headquartered in Parsippany, New Jersey in 2013, and we can see on the chart that it hasn't quite recovered from the COVID crash, and it's currently trading around $14.62. However, it does have a 1-year target of around $15.38, but that is not why I brought this stock to your attention. It does have a really nice yield of 8.07%, which equates to $1.20 annually. So if you guys were to invest $10,000 in the stock, you would actually make $861 every year in dividend payout. And this is without a drip. Now, a drip is if you guys take the dividend money and reinvest it into the stock. And if you were to do that, you would actually make annually $1,812, which after 10 years, you would actually accumulate $22,850. Now, I do want to point out that being that the stock hasn't quite recovered, we can also see that if we go into the historical data and take a look at their dividend payout, they have cut their dividend payout. We can see they were paying roughly around 50 cents per share, and they are now paying 30 cents per share. But I think in consideration where the stock is being traded today, that is still a fair value. And again, the annual dividend payout is roughly 8.07. And the payout ratio is under 50%, so that is a fantastic payout ratio. Now, this next stock on my list is actually UWM Holding. And United Wholesale Mortgage is one of the largest wholesale lenders in the nation. The company originates mortgage loans through its wholesale channel, and it originates primarily conforming and government loans. The company was founded in 1986 and has its headquarters in Pontiac, Michigan. And I have mentioned this stock in one of my other videos before. So this one is actually fairly new on the stock market. So if we go on the 5-year history, we can see it has only started trading in May of 2020. And yes, it has been on a downtrend. However, I think this might be a great pickup. It does pay a dividend annual yield of 8.99%. And if you guys were to invest $10,000 into this stock, you would actually get an annual payout of $929. Again, this is without the drip. If you were to reinvest your dividend, then you would have an annual payout of $2,068. And after 10 years, you would have a total of $24,323. Now, of course, being that this company has only been trading since 2020, if we look on the historical data and go to the last 5 years, even though it hasn't been trading that long, we can see that obviously it has not been paying dividend as long. It's only been paying dividends since last year, March, just about a year now. But you know what? It's always a good idea to get into a company from the grounds up, and perhaps you can actually hold this for 10 years and then we can see maybe the dividend grow over time. The third stock on my list for today is going to be Ellington Financial, and Ellington Financial is actually a REIT, and the ticker for that, let me pull that up for you guys, is EFC. And Ellington Financial is paying currently an annual dividend yield of 10.30, and it's currently trading around $17.65. If you were to invest the $10,000 in Ellington Financial, you would get an annual payout of $1,031, and if you were to reinvest your dividend payout, you would actually get an annual payout of $24.94. And after 10 years, it would be $26,686. Now, of course, I get it. You might think to yourself, well, $1,031 a year is not really that much money. The idea is to reinvest into your dividend stocks so that you're actually building a really nice capital. I know I've seen a lot of videos. I'm sure you guys have seen also a lot of videos where they're talking about living off the dividends, making $1,000 a month, making $2,000 a month. Well, the reality is that you need hundreds and hundreds of thousands of dollars and able to live off your dividends. So you have to start somewhere. So even though a lot of times I caution you guys of going into high yield dividend stocks because you never know if they're going to sustain the payout. Additionally, you want to make sure that the stock is actually going in the upward direction rather than declining. But if you're just starting out, it might make sense to start investing in high yield dividend stocks, and just be cautious and be sure that you guys watch the stocks so that you don't have any surprises. So you can't just put your money into the dividend stocks and let it sit there and do nothing. You do have to monitor them from time to time, maybe quarterly or semi-annually, and just double checking and making sure that the company still has the same outlook that it had when you started investing into the company. So that's just my 2 cents. The fourth stock on my list today is PennyMac Mortgage, and PennyMac Mortgage is an investment trust that is a finance company which invests primarily in residential mortgage loans and mortgage-related assets. And the company was founded by Stanford L. Kurland in May of 2009 and has its headquarters in Westlake Village, California. Now we can see the stock is currently trading around $16, and it does have a 1-year target of $18.73. But why I like to point this one out to you guys is it has an annual dividend yield of 11.89%, so that is quite high. Now we take a look at the 5-year history. We can see it has not quite recovered from the COVID crash, but that is actually great for us if we are trying to pick up some really good companies that are paying a nice dividend yield and trying to get them on a discount. So I would say that PennyMac Mortgage definitely qualifies under that. Now, if you guys were to invest $10,000 in Penny Mortgage, you would have an annual payout of $1,221. And if you were to reinvest the dividend payout, then you would actually have a payout of $3,443. And after 10 years, you would have an accumulation of $31,646. My last company for today is Ready Capital, and Ready Capital is also a REIT. It actually is a real estate finance company, and it engages in acquiring, managing, and financing small balance commercial loans. And the loans are eligible to be purchased and guaranteed or insured by Fannie Mae, Freddie Mac, FHA, USDA, and VA through retail, correspondent, and broker channels. And it was founded in 2011 with headquarters in New York. Now we can see it's currently trading around $14.56, and it has an annual target of $17.46, and it has an annual dividend yield of 11.84. So this is very similar to PennyMac, and you would have roughly the same outcome as if you were to invest in PennyMac. So with that being said, be sure that you guys do your own research on any of these companies that I mentioned for you guys today, as this is not financial advice. And if you guys got anything out of this video, please be sure to hit that like button and consider subscribing to my channel. And of course, don't forget to share this video with your friends. And I'll see you guys in my next video. Until then, bye-bye.